JD is the largest retailer in China. It went public in May 2014 at a price of $19 per share. If you invested just $1,000 in its IPO, your investment could be worth more than $3,000 today. Not bad to land a two-bagger in 7 years. Let's take a look back at JD's journey on how a simple brick-and-mortar retailer became China's largest online retailer. More importantly, we will look into the prospect of the company going forward as well. But before that, hi guys, my name is Stanley and I'm the co-founder of valueinvestasia.com, an investment portal where we'll give you investment news and also in-depth analysis of listed company every single week. So if you're new to this channel, remember to hit that subscribe button so you'll not miss out on any of our future videos. Now let's get back to JD.com. JD.com was founded in 1998 as a supplier of optical equipment. It launches its first online e-commerce platform way back in 2004. And that gradually expanded its catalog with books, CDs, DVDs and other products. JD's number of active customers rose from 12.5 million in 2011 to close to 100 million by 2014. Even at that scale, it is nothing compared to its current 531 million customer base. JD.com rapid growth was supported by macro factors such as rising income and also internet penetration in China. But it also moved very fast in expanding its product range and logistical network. So its early mover advantage in the country's e-commerce market really pays off. Unlike Alibaba, which primarily connects sellers and buyers on its Taobao and Tmall platform, JD operates as a first-party marketplace. This means that JD.com will purchase the inventory from merchants, then sell and fulfill their own orders. Alibaba founders Jack Ma once claimed that JD.com capital-intensive business model would prove to end in tragedy. But JD.com has really proven Jack Ma wrong and wrong again in the past decade. At the beginning, JD.com was hardly profitable, but its operating margin improved as it gains economy of scale. Plus, JD holding their own inventory has shielded shoppers from low quality and counterfeit products, which is flooding Alibaba's marketplace. So by selling its own product, JD has a much higher revenue, which is on par as a company like Costco, making it the country's largest retailer. JD.com's robust growth has also attracted big investment from companies like Tencent Holding and Walmart. That investment and partnership has been crucial to the growth of JD's in the past few years. For example, JD.com gained many new shoppers from its shopping mini program on Tencent's WeChat. It also worked with Walmart to fulfill online grocery delivery. All three companies consider Alibaba as a common adversary, so it makes perfect sense to join force and fight the evil empire. Since 2014, JD.com annual revenue surged from 115 billion RMB to 745 billion RMB today. It is an annual growth rate of around 36% a year. It also turned profitable in 2019, and its net income has more than quadrupled since. But not all has been smooth sailing for the company. A rape allegation against the company founders and CEO Richard Liu back in August 2018 caused the stock price to plummet more than 50% below to about $20 per share. Although at the end the charges were dropped, the scandal highlighted just how important Richard Liu was to the company. At the time of his arrest, Richard Liu held an 80% voting stake in JD.com, and this unusual rule prohibited the company's board from making any decision during his absence. Today, Richard Liu has stepped away from the company's day-to-day operation and handed that reign to Xu Lei, the CEO of JD Retail. Although Richard Liu still maintains a majority voting stake in JD.com, him stepping down is a good step in helping remove the key man risk of the company. With the growing maturity of its e-commerce business now, JD.com has morphed into a cash flow machine. In the last 12 months, JD generated free cash flow of more than 31 billion RMB. And that gives it the fuel it needed to venture into many other fast-growing businesses, such as JD Logistics and JD Health. JD Logistics actually went public on the Hong Kong Stock Exchange in May this year, and it is now growing its logistical business by extending that service to external customers. The company, which is still controlled by JD, already provides driverless vehicles and also drone delivery as well. JD Health, which was spun off in December last year, can also continue to grow on its own by expanding its online healthcare business and telehealth market as well. Apart from that, its smaller cloud and fintech division could also act as growth catalysts in the future as well. Today, JD.com is listed both in the NASDAQ and also Hong Kong Stock Exchange. Personally, I do own JD.com and the company is making up about 1.7% of my own portfolio today. In terms of stock performance, its stock's price has hit an all-time high of $108 per share back in February this year. Unfortunately, China's crackdown on its top tech companies has also affected JD.com's share prices as well. But at the moment, it is only trading at around 24 times its earning and less than 1 times its sales. I would say that its share price is not looking very expensive at the moment. So guys, what do you think of JD.com? Is this a company that you will invest in? Share your thoughts with us below. If you have gotten value from this video, please give us a like and also share it with a friend who you think might benefit from it as well. If you're ready to move on to the next stage of your investing career, you can also check out our free investing course at valueinvestasia.com/free course, where you can learn practical skills of investing like reading the financial statement to how to value a stock as well. Anyway, that's it from me. My name is Stanley. Till we meet again, invest safely.